welcome to the channel. Yesterday, our discussion was very simple. I just told we need a closure below this level in 15 minutes. If we get closure, then we can look for a pullback and still sell the market. This is what we discussed. Market opened slightly gap down, and in the first 15 minutes itself, on the second 15 minutes itself, market gave a closure below our level. This was a liquidity pool which I had drawn yesterday, and market gave a closure. So the moment we got a closure, immediately our thought process should be where is an extra supply from where the market can react from. This is a supply which is available as part of yesterday's closing, and your trade plan should be planned in such a way that this should be your entry point, this should be your SL, and always keep 100 points. Always keep 100 points. Make this as a rule in every trading session of yours. If you're entering at 26,170 level, make sure you're exiting at 26,070 level. I know that I told that it can go till 26,000 level, being a psychological number, but the moment you get 100 points, you should not miss that 100 points. After that, you start trailing for every candle to candle. Make this as a rule always. This is one of the lessons learned for me as well, being a trader. I should have kept my trade at 100 points level. I entered in this place, and the moment it hit my target, here I started trailing, and the immediate next candle was a dodgy candle. If you see here very clearly, the immediate next candle was a dodgy candle. This is where I closed my position. The reason why I closed is, if you see in the previous charts, there are several demands from where the market can react from. This is one of the demand in 15 minutes, and this is another demand in 15 minutes. So these are all several demands from where the market can react from. These are all inefficient demands, meaning market did not retest them earlier. There are small gaps which are left out in on the way up, and this is where market has reacted from today. So if you had planned your trade also in such a way that you could have captured this move easily as part of yesterday's analysis. Anyways, moving on, we saw that market reacted positively from a demand. Although it did not go all the way to the extreme demand, we saw that there is a reaction, and there is also a sweep and closure of the liquidity pool which we had mentioned in yesterday's video, and market moved down nicely, right? But still, what I wanted to show you is, if you go to days chart and see this, this is still a indecision candle. Market opened flat, market came down, market went up, and market came down, and again market pushed up. Basically what happened is, this is how market reacted. Market opened flat, went down, went up, came down, and almost closed at the same level of it being opening. This is how a doji will be formed. This is what has happened in market. If this doji is a reversal candle, then the moment we get market moving above today's high itself, it will go all the way till the extreme supply. Because the reason why I'm saying is, market reacted from a demand, right? So the moment we see closures also, even market moving above this also, there will be high chances that market can go all the way here. So our trade plan for tomorrow is very, very simple. The moment we see the market moving about 26,180 or 200 itself, we can see that market can easily move up all the way till 26,325. The reason why we are looking for a long here is, market is slightly bullish from last hour of the session, last 2 hours of the session, and this momentum is very strong compared to this momentum which happened. And there is not much of a powerful candles here, but if you see here, these candles are pretty much big bodies comparatively to the sellers which were available. So there are high chances this liquidity pool out here, meaning the relative equal high liquidity which is available here, would be hunted before even market goes down. So what will happen tomorrow is a hunting of this liquidity, market coming down, and then market can go up and then react from the supply. This is what will happen for tomorrow. So make sure that you keep your lot sizes extremely small, because market can be volatile. This move can be highly volatile, and market can reverse all of a sudden without even you realizing that you have lost the position, and you have not capturing the profits which you had got as part of your correct trade. Okay, so just saying it one more time, if market opens flat and goes up, then we will look for longs. Okay, this is for market moving up. If market moves down, then Only when I get closures below 26,060, then I'm looking to short the market till 25,960, max to max, or even I can see a target till 25,920, not more than that. This is how the market can react on the downward side. Okay. So what about very big gap up? If market opens very big gap up, we need to watch the price action. How the market is reacting when it comes to this supply. If we get a negative reaction, then we can look to short the market. If we don't get the negative reaction, and if the market is continuing to move upside, let it go. Because we have several open demands on the downward direction, and we need those demands to be filled before even the market goes up. What about very big gap down? Gap down is going to be very simple. If market comes out here and give a positive reaction, then I'm interested to take the market higher, at least till today's closing. Simple. So keeping the video short, if you like the analysis, make sure you like the video, subscribe the channel, and do comment whatever questions you have. Thank you so much for watching. We will meet in the next educational video.